Today we are going to go do a live coaching call with our brother Sam here, who is just getting started on the road to financial freedom. So for those of you who have a net worth of under $100,000, this is for you guys. For those of you guys already to accredited status and more, you probably should just listen to the next podcast or give this to your kids because you've probably forgotten how you got to that point. And maybe there might be just a few tidbits in here that you can glean from. But Sam, are you there, man?
I'm here.
Yeah. So give us a little background, a little context, what you do for work, and we'll get rolling right to this personal financial sheet.
Cool. So I am 6 years out of undergrad, 28 years old. I work as a recruiter for a charter school here in the LA area. So basically helping them hire their staff. So very new to real estate investing, just closed my first turnkey like 3-4 days ago. So looking forward to grow my portfolio and looking forward to taking things to the next level and going through the coaching call.
Yeah. And we connected, what about, I don't know, probably like middle of last year, right? Or something like that. You didn't have any property.
Yeah, I think we first spoke in the spring. Then you had to meet up in LA. I think that was like June or something. And then I've just been rolling since then. But started listening to your podcast earlier this year and we had a call and we had to meet up.
That was how long ago?
We probably spoke 4 or 5 months ago.
Okay, cool. And I think at that time, how long have you been like just reading on listening to podcasts? Just when did you finally get that first bug to look into this?
About a year ago, last November, I got a friend of mine recommended me to listen to a Bigger Pockets podcast. And then from there, I just started reading the website, just reading a lot of beginner investor stuff, different books. And I started listening to your podcast and other great people. But I gave myself a deadline of Thanksgiving of this year to do something with the information. So about a year ago, I got the bug.
Awesome. And here we are, right? Now you're a proud owner of your first rental property.
Definitely.
Yeah. And a part of it was you probably could have done it a little faster, but you're saving up along the way, right? That was one constraint that you had, just saving up liquidity.
Yeah. One thing was saving up. To speed that up, I took a loan against my retirement just to pair with what I had been saving. Otherwise, I probably would have had to wait till next year. And I'm like, you know what? I don't want to wait. I need to figure out how to do this faster. So I decided to do that. The payment, not much. So that's what I thought would be best to get into this thing faster.
You went through the whole thought process of you're rating your retirement, right? Most people are like, no, don't do that. It's a huge sin.
Exactly.
How would you explain that, folks, that's new to that idea?
My situation was unique. I was giving too much into that plan. My employer matched 3%. I was giving 7%. But when I called the retirement plan to talk about my options of withdrawing or taking a loan, I realized that if I decrease my contribution to the employer match, the difference between that 3 and 7% would cover the loan payment. So my personal cash flow wasn't impacted. So I would say to anybody, just look at your budget, look at your monthly expenses, call your retirement plan up, see what the options would be. If you took all of it out, see what the options would be. If you withdrew it and paid it back over a 5-year term with interest to yourself. And if it works in your budget and it won't blow things up for you and you need money, if you don't want to wait, I would go for it. Especially if you're younger, you'll make it back over time. I personally think it's worth it. If financially, if you can make the numbers work, I would look into it. There are a ton of options to get to finance creatively. That's just one of them. So whatever, you don't really know what's going to happen with your retirement plan. It can go up, it can go down. Like there's no telling. So if you can do something where you can control it and put it into real estate that's more likely to not going to perform, it's probably going to perform better than your retirement portfolio will perform. So that's my opinion on it.
And a lot of that is you don't know if it's going to perform. Like, I guess sitting in Sam's position, we talk to a lot of people. I'm a sort of a living example. It works. And there's a lot of other people that it works. And it's important to get around other like-minded people who have done this. A lot of people are like worried about the penalties, paying the taxes. My whole spiel on that, on taking your 401k out, your retirement money out, is number one, you're going to pay taxes on it now or in the future. I personally would rather pay taxes on it now while you're in the lowest tax bracket right now. And the way this country is going, all tax brackets are going to be going up in the future. So I think from that perspective, it's a no-brainer. And then I'm sure I don't know, did anybody tell you about the penalties, Sam?
Yeah, they did. So it's interesting. So I considered taking out all of it, but long story short, based on the amount that I had in there, if I took all of it out, it would have come up to the same amount after all the penalties. That it would have been the same amount of whatever I was able to borrow against. That's all how the tax penalty works. However, what I'm planning to do at the top of next year is just to withdraw what's remaining in there, just because the taxes will be a bit less and something I can manage. Like whatever, when it's time to pay taxes next year, I'll figure out a way to pay it. People did tell me about the penalties. They told me about the penalties. They're like, "Oh, you're missing on a big opportunity if you withdraw it." And I'm like, "Whatever." They're supposed to tell me that so I can keep money in the plan so somebody can make commission.
And
So,
that's what it comes down to. The big question is, are you able to invest the money and make more money than if you would have left it in there? And so let's talk about this turnkey you bought. I know you got it in Dayton, but let's just go over the high level numbers. How much you buy it for and what does it rent for?
yeah, so I bought it for 89,900. It'll rent for 900. 3 bed, 2 baths. After expenses, I should have roughly, like I got the numbers more concretely now. So 300 or so bucks each month I'll have in cash flow.
Again,
So
what was the monthly rent on that one?
900.
900 bucks a month. And the rule of thumb is you take 50 or 60% of that. So that's, let's go with 500 after expenses and CapEx. And then what do you subtract what's your mortgage payment, your PITI?
Think it's probably check. I think it's 478. I think 478 or 472. One of those.
Yeah. So if you're running your numbers really conservatively, you're just about breaking even, maybe 50 bucks, 25 bucks. That's just cash flow, right? It's not including mortgage pay down, appreciation, tax benefits. And the fact that you're walking down this path to financial freedom and you're going to get better deals. That's the goal. Did you try out the analyzer? I think for a lot of newer folks, I think it's still available at simplepassivecashflow.com/analyzer. If you join the club, it's in that treasure trove of Google document files. But when you ran it through that thing, how did it look?
It looked good. It looked good. I had a calculator I was using. It looked good. I knew that if the red to price was at least 1% for my first deal, fine. Let's just do it. I didn't crunch the numbers. Like that was the main thing I looked at. Is it at least 1%? If it is, then let's just do it. So it's assuming everything checks out, inspection, all that good stuff. I was like, let's do it. And then alert along the way. So I didn't analyze the numbers. I did like basic stuff, but I didn't look too deep into it because you analyze too much and you might talk yourself out of it.
And I think like looking at your timeline, a year from doing this, but you had to save money in the process. That probably slowed you down by a few months, maybe even 6. This is textbook. Good job, man.
Thank you. Thank you.
I think a lot of people just don't take action and yeah, great job. Let's head through this personal financial sheet. For a lot of people, you got pretty good credit scores. You don't need good credit. You just need like a 750, I think. Did they tell you what the minimum score was to get the best rates? I think it's 750.
I'm not even sure.
Oh, yeah, you don't care.
No,
Yeah. See, that's another example. If like you have a good credit score, you don't really get into all like the complicated stuff. And
yeah,
I think you're starting to see the whole simple passive cash flow. Like for you, it's complicated because you've got lower net worth, you're starting out, but for the accredited investors, it's super easy in terms of tax, legal, and what you do with your money to invest. It's an unfair game once you start to get on that path.
definitely.
So you've got about 100 grand of assets and different stuff here, and you've got your loan. That's what your turnkey, right? The 71,000.
Yep.
Okay. So your net worth is shaking out to be about 30 grand, but you've got some student debt.
Yeah, about 35,000 left.
Okay. Which puts you right back at zero. But hey, you're a lot better than some of your other compadres that went to college.
Oh yeah, I'm not complaining at all.
Yeah. What do a lot of them they have? Because I'm just getting old here.
Say that one more time.
What kind of college debt levels are a lot of your peers leaving with these days?
Man, it varies. It varies. I went to a state school in New York, and so I only had federal loans. I had about, I don't know, 50K or something when I would finish, and I was paying it pretty aggressively. But I actually forgot to mention, I put it into forbearance so I could save for a turnkey. So I didn't pay for 12 months. I think I started again in like June or July or something on minimum payments. But there are people who have 6-figure debt for an undergrad degree who went to private schools and did all this stuff. There's a lot of things I didn't do, but that's one thing I'm like, you know what? I don't have money. I'm going to go to a public school, federal loans, max it out, pay what I can. So I'm not complaining. I'm in a good place. There are a lot of people my age who have 6-figure debt. It's ridiculous. And it holds them back from being able to do things in life. So thankfully, that's not my situation, but it's very common to have someone around 28, 30 years old with 6-figure debt for an undergrad degree.
Yeah. And that's a good mindset. That's a good mindset to have, is always be like gracious at what you got. So many guys are like net worth 200, 800, $2 million net worth, and they don't have that. They just keep grinding. So If one thing I've learned, and I still struggle with this myself, is wherever you're at, if you can just be grateful with what you have, you'll be pretty damn good, at
Absolutely.
least in your head.
Absolutely. Yeah.
But without this, put that soft stuff on the side here. So you're pretty much at zero, which is not a bad place to start off with. Your salary here, about 5,000 a month, pretty typical, right? Like still the new guy job, right? The starter level.
Yeah. Post tax.
What are you thinking that's going to go up in the next 10 years? Are you good at your
Um,
job or are you just another guy?
It depends. I'm pretty good at my job, but I do work in education, making like around 80 a year. That's pre-tax, but it depends. It depends. I've had 2 offers this year for higher positions than what I'm doing, director positions. I got one last week, but the salary, the salary was, it was, I wasn't satisfied with it. What they offered initially was 2,000 more than what I made. And then I counter offered and said I want X. They came back with 3,000 more. But for me, I'm going to turn it down because I don't see the point of taking 5,000 more dollars for more stress, more work. Like my job now, it doesn't take a lot of my brain capacity. I'm able to work on what I want to work on, look at deals, look at real estate stuff. It's not stressful. So as far as how much it'll increase, it remains to be seen. Just what has to be the right opportunity for me.
So how many hours are you working currently on real estate activities after you do the day job? And how many hours are you doing the day job day, you figure?
The day job per week, 40-ish, to be honest with you. I work at a school, so most of the time it's not even actually doing quote unquote work. So it's honestly it's not stressful. Outside of that, the last month, probably been spending like an hour or two with all the closing. Yeah, we took about 30 days to close. So every day, pretty much a couple hours taking care of stuff, either during work or after. So maybe 1 to 2 hours a day outside of work.
Yeah, 'cause they'll start to be very like, I've run out of stuff to do, especially once this turnkey rental starts to produce and there's not much going on. Hopefully it goes well for you like that. What I'm drilling down to is this net cash flow here. So if you're going to make after tax 5 grand and then your living expenses, which are pretty high because you live in an expensive area, you're down to saving 10 to 20 grand a year. Does that sound about right?
Yeah.
So most times I'll recommend people like do exactly what you say. Don't take the promotion and for the extra headaches. But for you, the extra $1,000 will help you to purchase a property instead of purchasing a property every 2 years, every 1 year. So that might be useful for you. It comes down to this fundamental question is like, what's your highest and best use? What can help you save money the fastest?
Definitely. That's a very good point.
Because this is the most important number down here. This is like when we do apartments, the NOI, net operating income. And you can, just like here, you can either make more money or you can save on expenses here. So out of those two, make more money or increase expenses, which one do you think you can work on or have a better chance at?
I would say probably making more money because my living expenses, I'm a pretty frugal person. But again, I live in LA. So my monthly expenses are what they are. Making more money would be great so I can save more and scale faster. So I would say that. I would say making more money, figure out a way to make more money.
And that'd be at like a promotion or something like that, day job.
Yeah, promotion or figuring out something I can do on the side potentially.
Any side gig ideas?
No, I'm trying to figure it out. There seems that there's so much out there. I'm trying to figure out what I could do, but I'm definitely open to suggestions and recommendations.
Yeah, I think living in LA, you can't really spend time finding deals. I'm not a big fan of doing the remote investing, especially at this stage of the market cycle. I know a lot of these guys like to do the burst stuff, but I think it's playing with fire. On this pace, you'll be the financial freedom in probably about 10 years, you know?
Yeah.
So you have to ask yourself the question, are you okay making it in 10 years or do you need to accelerate it? If you're
10 years is good with me. I gave
Yeah.
myself 12 years till I'm 40 to be able to be free. I'm cool with steady growth. I'm not one of those people who are like, oh, I need to retire in 5 years. I'm still pretty young. If it happens in 10, 12 years, that's good with me.
if it is 10 years that you're okay with, then what I'll say is don't take the extra chance. Don't buy these crappy properties out there and put 50 grand in rehab to maybe get a little bit of extra equity.
What would you recommend?
Just stay in the course, save the money, make a little bit more money at your day job, and just keep buying these rental properties one by one.
What are your thoughts on the burst strategy? You mentioned there's playing with fire. Tell me more about that.
There's a lot of
Yes.
risk. Number one, you can lose your money and you're wiring your money to some joker who has a truck out there that you've met, maybe you've taken out to dinner, maybe you have a good relationship. But at the end of the day, a lot of these guys, and I've seen people just get burned after saying they thought that they had a really good relationship with them, but you're working with people who are not aligned in terms of interests. They may help you out, but if something happens in their personal finances, and a lot of these guys are paycheck to paycheck, they're going to screw you over having their family go down. So that's number one. Number two is the big risk with having your money in the deal with change orders, unforeseen conditions. This is the stuff I used to do at my day job. And I'm very aware of the risks in big construction projects. And I don't want to put my own capital at risk for this stuff. And thirdly, I think people rely too heavily on banks giving you favorable appraisals and being able to refinance you. I see it all the time with the switch and bait on these guys. Dude, they tell you, yeah, Sam, that's the picture. We'll give you 70%, 80% LTV. But after the property gets done and you have 80 grand of your money into it, making nothing, and your property is vacant, they're going to appraise and give you a lower value and maybe bring down your LTV after the fact. And now you end up with the same amount and just did all that risk and you never got any of the extra equity. I just think it's just a big risk. And this whole process takes a lot of stress and, more importantly, time, where that time might be better spent with someone like yourself to go to your day job and get that promotion.
Yeah.
It's completely opposite of what you read on those other internet forums that you like to read all day. I think you're in the middle, right? You're not one of these broke guys with no job, no career. Yet you're not on 500,000 or credit investor status. You're in this limbo land. But that's where I was. I was only able to save $30,000 out of college a year. And that went up, up and up as I started to pick up each incremental rental. But remember, it took me like 7 years to get up to 11 rentals. And yeah, I could have done it faster. And maybe back then I should have done the burst stuff. But every day you wake up, it's another day that it's a world record on how long of a US bull market is. It's been so long since 2008.
Absolutely.
If you burr, what is the best case scenario? You're financially free in 5 years? Like you said, you don't care. It's not worth the risk. I don't think it's a good risk adjusted return. But any thoughts on that?
Yeah, I definitely see your side. There are two camps with burr. Some either, if you know what you're doing, it can work, but you're going in without much knowledge, experience, or just knowing exactly how things are supposed to go, the risk and what can potentially happen, and not building in contingencies or thinking of the worst case scenario, it can definitely bite you. So I definitely understand your side of it.
For most people who make over 60 grand a year at their day job, they likely will go to syndications and private placements at some point. And they're a lot quicker than they think. And like the networks and the knowledge you build doing the burr, you learn a lot, but there's not really any carryover into syndications and private placements. And that's why I never like to invest any time into things that won't help me in the future. For example, I don't go golfing because that's not going to help me.
I feel you.
But anything else you want to chat about real quick? You've got a long road ahead of you, but
definitely. What advice would you give someone in my position, just as far as just making additional income outside of work on the side? Are there any things you've seen people do to make some money, to savings, to buy properties?
Yeah. So a lot of people will try this thing called trade lines is what I've been playing around with. Have you looked into that?
I have. And I have. And
so for people who haven't heard of this thing, you can rent out slots as authorized users on your credit card, usually about a couple slots, and people will pay you for that. And people will argue if it's like safe or not. Look, I've done it this whole year and I've made over 10 grand doing it. You can go to simplepassivecashflow.com/trade lines and there's the complete ultimate guide there. But like someone like yourself, right? You can make an extra 5-10 grand a year pretty passively. And I think a lot less risk, in my opinion. There's no tenants screwing up your property. This is pretty clean, in my opinion. So that's a way. The overall question is you have to make money, right? I don't know how to make money. I know how to invest it. You can sell drugs. You can go and do all kinds of legal things. Hopefully do something that's legal, but you can make a lemonade stand. It's something for you to think about. And unfortunately, a lot of those money-making things, you have to pour more money into it. If it was free, it was as easy, and you didn't need capital, you need to put your money where your mouth is, then everybody would be doing it. But you've
Yeah.
already found a pretty good place to put your money.
Yeah, I did. I got approved for a couple of my trade lines to be purchased, I think last week. But I guess the thing for me is I know it's a small likelihood that the card will be closed, but I don't know. I'm just nervous because what if my cards get closed? It could just screw things up for me. So I think that's something I'm hesitant on, but I do have like trade lines that can make some money.
So let's talk through this. Worst case scenario, what if your cards get closed? Then
Well, what does that process even look like? So I say, oh, whatever activity, we're closing your card. Would that negatively impact my credit?
I don't think so. Hasn't done to me mine. I'm not a credit expert, but
Yeah. Yeah. Worst case, the card would close
and you lose
and
20 points. Oh no.
card would close and then I could get another one. Really good credit. So I'm pretty sure there's like a bunch of cards I'm sure I can get. My credit is very good.
Yeah, what I would do is I would be getting like the Capital One card and then the Chase one, the one that has like the 15-month, 12-month, 0% purchases and balance transfers, and just
Mhm.
seasoning those because it takes 2 years for you to start to be able to use the trade line on it.
Yeah.
And then, but just monitor, a lot of this is just monitoring your credit scores. It's 790 right now, right?
Yeah.
But just watch it month by month. If it starts to go down to 750, ease off what you're doing and you'll see it. I saw all my Chase cards got closed because they're probably the most sensitive out of the big banks. And I didn't see my credit score drop 50 points. I saw maybe like 20, but maybe it was because I was maxing out the other credit cards with the 0% balance transfer and purchases.
Do you know city cards? Are they pretty sensitive or no?
I just know Chase is the worst.
Okay. Chase.
Yeah.
Okay.
Yeah.
Cool.
So
Yeah.
what I would do with the Chase accounts is just have your trade line broker just say, hey, we just want to rent out one slot at a time.
Yeah, definitely. Sounds good. And they would only close it if they think there's some suspicious activity going on, but they can't, if you take somebody on and off, that's what's wrong with that?
I don't know, man. It's their money. It's their rules.
Yeah,
Yeah. If there wasn't this little bit of risk, then everybody would be doing it and you wouldn't be getting paid for doing this.
that makes sense.
But I think the risk, so they close your credit card, right? Who cares? Just go get some more.
Yeah, that's a good attitude to have. But yeah, I think it could definitely give you some more money and kind of pad that savings.
Yeah.
Get up.
Just don't be a bonehead and watch your credit scores because you don't want to
Yeah,
drop down below 720 because I think that's the level where you start to get the worst rates. So like for you, your credit scores are important. You need to stay above 720, 750 to get the best rates on these turnkey rentals. But for me,
yeah,
I don't care. All the stuff I do these days are commercial lending. So I
right.
just got to stay above 650 for me. I'm
Got
not
it.
sure. But for guys doing commercial loans, it's 650. But yeah, I wouldn't worry about it, man. Don't, again, all this stuff is just for entertainment. Don't come crying to me if Chase closes all your cards.
Like, well, Lane, the city closed my card. It's your fault.
Yeah, but you made like $5,000 in the process.
Yeah.
Yeah, to close things out here, it's cool that you're playing around with the tree line things. And for me, I just do it because of sport. It's fun to get, hey, you just sold a credit trade line for $200. For me, it's fun. That's why I do it. I think it's a little bit of, I don't know why the heck I waste my time with some of this stuff, but this is probably why I talk about it and do a podcast about it all the time. But for you, if it's fun for you, then cool, then keep doing it. But look, like you said, you're going to be financially free in 10 years. Start acting like it. I think a lot of people, they like to have this mentality that they're grinding because it makes them feel, it feeds their ego, but you're going to get there. Relax.
Yeah,
Enjoy the ride.
definitely. I needed to hear that.
Yeah. Because you could get hit by the bus tomorrow and who knows. And by the
Very
way,
true.
I think for someone like yourself, the infinite banking, I know we talk about all these cool things like infinite banking, but until your net worth gets to be above 250,000, 500,000, you shouldn't even think about that kind of stuff yet. Every single penny you get needs to be put into rental properties or investments that make you more money. All right, Sam, we'll appreciate you doing this. Hopefully somebody learns from this. If you guys are listening to this 10 years later, Sam will probably be very rich. I'm sure he'll buy you guys dinner at that point freely.
Yes and yes.
And we'll talk to you later. Bye.
All right, Lane.